So if we come over here in the world, it's been pretty much playing out the same way. I'm not going to read these articles. It's going to be really boring for you, but it's supply chain issues, right? We've been seeing that the economy, it's been having a negative impact. The cost per goods have been increasing. So people have basically been paying more. Wages have been increasing as well. As you can see here, non-managerial pay has been increasing and average hourly pay has been increasing, but inflation has been rising faster. The cost per goods have been rising faster. Now, the reason that's important is because your money's basically losing purchasing power, like we always talk about. And it's because primarily of supply chain issues that came from the coronavirus pandemic. Now, I just want to be very clear with you guys. When it comes to big events in the economy, it takes longer than you expect. It's not going to happen overnight, especially with Bitcoin being a safe haven asset. This could happen, I think personally, from what I looked at it last time, this could happen in a year, maybe a year and a half. We could really start to see the negative effects of what they're doing. So right now, there's kind of emergency bond purchases from the government. The way that they're basically injecting stimulus into the economy is they're buying bonds, okay? They're buying bonds artificially, which kind of reflects in the price. If we look at a 10-year bond, you can see that we've been going on a downtrend. Now, the downtrend indicates that people are buying it and the yield is dropping. It's not exactly fake. There's people actually buying bonds, but from my perspective and from a lot of people I respect as investors, who wants to buy a 10-year bond when inflation's outpacing the yield? It doesn't make sense to me. It's not really a safe haven asset anymore. And people are going to start looking to commodities to get a better return on their investment. Right now, personally, I believe it's better to put your money in risk assets because of the economy. The risk is a little bit higher now investing into these traditionally safe haven assets. But I mean, I don't know. That's my personal opinion. I think the stock market's going to come to a massive halt as well. This inflation can't really last forever. And basically right now, there's, again, emergency stimulus into the economy. And they're planning it in Europe as well as the United States. We kind of see them mirroring each other, right? They're continuing with the emergency stimulus. They don't want to stop it. Even though the stimulus is causing inflation to rise, they want to keep it going because if they stop it abruptly, there could be massive issues. And this is the point I keep trying to make with you guys. If you guys have been watching me for a while, I've been talking about this for about a year and a half. It's a negative feedback loop. The more stimulus they put out, the higher inflation goes, the more people get taken advantage of subliminally without anyone knowing. And it's not their direct fault. It's just the way the system's set up. It requires them to basically continue the stimulus, which increases inflation. People freak out. They're like, inflation's too high. They want them to stop the stimulus. They get scared, which forces them to increase stimulus because people stop investing in bonds for this exact reason. They stop holding the US dollar because inflation's too high. And it goes into this negative feedback loop. And this is how it can get out of control because this is where hyperinflation comes into play. Now, I'm not an economist. This is just solely off of information I've accumulated over the years. I'm young. So take everything I say with a grain of salt, and you definitely need to do your own research, which is what I promote on this channel all the time. I'm just giving you guys my perspective, and it's not just my perspective. There's a lot of people talking about the same thing. Getting it from Kathy Wood. I'm getting it from pretty much anyone that's a massive investor. They're all saying the same thing. So the case for Bitcoin, I would say, is really set up for success. I would say even in the short term, if Bitcoin drops again, even if Bitcoin goes to 28,000, even if Ethereum goes to 1,500, the global climate is really set up to pave like a really good path for Bitcoin. I think there's never been a better time. And Bitcoin was actually created for this exact reason. And I'll continue to mirror that and echo that, regardless of YouTube shadow bans me or not. But if we come over here, let me kind of just dive a little bit deeper. This is actually from ARK Investments, basically talking about a couple areas in society where we can see a lot of massive growth. Now, there's also really big problems in the world that people are not aware of. So I did want to read that. Thought it was really interesting. As you read this white paper, more than 700 million people live in extreme poverty, are undernourished, lack access to basic drinking water, and live without electricity. 1 in 5 children are not attending school, 750 million adults, 2/3 of the women are illiterate. In the world's cities, 1/4 of the population lives in the slums, 9 out of 10 breathe polluted air. I don't even like reading this, to be honest. My goal here is not to make people feel negative about what's going on in the world, because there is a lot of good. The point I want to make here is some startling numbers, because it's really interesting, right? As people start to adopt digital wallets, right? By the way, there's a huge percentage of the population that are unbanked, that do not have access to financial services, but they do have access to, for example, an iPhone and internet, right? And this is happening all over the world. More and more people are getting access to internet. If you ever travel the world, if you haven't, I suggest you do it. But if you ever travel the world, notice how hard it is to get internet in some places. And that's getting better and better over time. So as you can see here, they believe that digital wallets offer a crucial entry point for financial inclusion, especially in emerging markets. Between 2011 and 2017, the global unbanked rate declined as smartphones and digital wallets increased. As shown below, between 2014 and 2017, mobile money accounts grew the fastest in low-income countries as a mobile phone adoption jumped more than 1,700 basis points to 67%. So as people get more phones, more internet, they seem to adopt more digital wallets. Digital wallets have a positive impact on consumption, savings, poverty, risk sharing, investment, and mitigation, particularly in emerging markets. When migrants use digital wallets to remit income to Bangladesh, they cut poverty in rural households by 42%. In Uganda, after the adoption of digital wallets, the food security of households far from the bank breaches increases by 45%. Urban migrant households that use digital wallets in Bangladesh saved 296% more than those who did not. In China, thanks to digital wallets, mobile payment volume increased from D- levels in 2013 to 250% of the GDP in 2020, boosting business formation and income while protecting households against income shocks. Now, the point here is that there's a big percentage of the world, and you can read more of this if you guys want. This is from Kathy Wood and ARK Investments. They have this for free on their website, and it gets very detailed.